Hello friends, welcome to our channel Letstute Accountancy. In today's session, we will be learning in detail the meaning and accounting treatment of some peculiar items in non-profit organization. But before we begin, do like, share and subscribe to our channel. And also check out our website www.letstute.com where many accountancy and other courses are available at super affordable prices. Friends, in previous session, we already understood the different type of expenditure in NPO and how do we identify them. Let us now understand some peculiar items one by one in detail. Do watch out this video till the end because for the accounting of non-profit organization and preparation of their final accounts, it is utmost important to understand the meaning and accounting of these terms. So let's begin. First one is subscription. In non-profit organizations, subscription means the membership fees paid by the members to the organization on regular basis. This is one of the most important sources of income for such organizations. It can be collected on monthly, quarterly or yearly basis. Now how will this be accounted or presented in financial statements of NPO? So, the subscription paid by the members is a revenue receipt and thus shown as receipt in the receipts and payment account, and as this is a revenue for the organization, it will be credited as income in the income and expenditure account. But its treatment also depends on the period for which it is received and in which year it is received. So do note that in receipts and payment account, the total amount of subscription actually received during that particular period is shown irrespective of the fact whether it is received for the current year or previous year or next year, since it is prepared on cash basis. But income and expenditure account is prepared on accrual basis, and so the subscription income shown in that will be confined to the figure related to current period only, irrespective of the fact whether it has been received or not. So the receipts and payment account reflects the figure of subscription received, whereas the income and expenditure account reflects the figure of subscription earned or accrued during the year. We will understand this in more detail while solving the sums on NPO, but for that we need to know the concepts very clearly. So is this clear to you all? Moving ahead with the next item, that is donation. Friends, what is the first thing that comes to your mind when you hear the term donations? Yes, you guessed it right. It is something that is given as charity, especially a sum of money. Basically, from the viewpoint of NPO, it is a sort of gift in cash or property received from some person or organization. Now let's understand the accounting of the same. Donations received by NPO appear on the receipt side of the receipts and payment account. Also, the donations can be for specific purpose or for general purpose, that is specific donations or general donations. Speaking of specific donations, in case the donor specifies the purpose for which the donations can be used, it is known as specific donation. For example, if a donor donates Rs 6 lakhs for a library, then it means the donation received can be used only for the library, and so it will be termed as specific donation. The specific purpose can be an extension of existing building, construction of new computer laboratory, creation of book bank, etc. So where to show these specific donations in the final accounts of NPO? Friends, do note that such donations are to be utilized only for the specified purpose and hence shown on the liability side of the balance sheet irrespective of the fact whether the amount is big or small. Whereas the other type of donation is general donation. This is the donation where the donor does not specify any condition for its use. Such donation is to be utilized to promote the general purpose of an organization. These are treated as revenue receipt as it is a regular source of income for NPO, and hence it is to be taken as income and credited to income and expenditure account for the year. Have you all understood this much? So moving ahead, next is legacies. Can you tell us what is the meaning of legacy? Have you heard this term? It is the amount received as donation by the non-profit organization under the will of the deceased person who may or may not specify the use of the amount. If any purpose is not specified, then it is accounted as general donations and it would be considered as revenue in nature, credited to income and expenditure account. Whereas the legacies, use of which is specified, will be specific legacies and are capital receipt, so shown on the liability side of the balance sheet. Basically, revenue receipts and expenses are shown in income and expenditure account. Capital receipts and expenditure are shown in the balance sheet. So now moving ahead to life membership fees. Now friends, can you guess the meaning of the term life membership fees? Basically, non-profit concerns usually collect subscription every month or year from their ordinary members. Now there is another category of members also called as life members from whom the subscriptions are collected as lump sum. These members prefer to pay lump sum amounts as their life membership fees instead of paying periodic subscriptions. Such receipt is non-recurring in nature and so treated as capital receipt and thus shown on the liability side of the balance sheet. Also, the organization can transfer a proportionate amount from life membership fees account to the credit side of income and expenditure account, that is on the income side. This apportionment can be based on age and average life of a member, or it can be an amount equal to annual subscription as per the decision of organization. Some organizations might directly capitalize these fees, which means it is added to capital fund. Now next is entrance fees. We all would have heard this term many times, especially during the admission in schools and colleges. But here we are talking in terms of non-profit organization. Entrance fees or admission fees is the amount paid by a person at the time of becoming a member of a non-profit organization. It is paid only once by the new entrants and so generally entrance fees are treated as capital receipt, thus capitalized, that is added to the capital fund. Some organizations might charge very nominal fees as entrance fees and might treat this as a revenue receipt and thus crediting it to income and expenditure account. Generally, there may be bylaws as regards the accounting treatment of such amounts. For example, they can treat this as capital receipt or revenue receipt or part capital and part amount as revenue. So accordingly, it is shown in the financial statements of NPO. Moving ahead, the next concept is sale of old asset. Now for instance, if a furniture with a book value of Rs 800 is sold for Rs 700, how will this be accounted as? Sale of asset may result in gain if the sales value is more than the book value, or loss if the sales value is less than the book value, or neither profit nor loss if sale value is equal to the book value. Now, if any asset is sold, the selling price received is debited to receipts and payment account. But be careful here that it is not taken as income to income and expenditure account because selling price is neither the income nor expenditure. The profit or loss made on sale of asset is recorded in income and expenditure account. Now let us look at the accounting treatment of this example. The amount of 700 received on sale will be shown on the receipt side of the receipts and payment account, and while showing furniture in the balance sheet, Rs 800 will be deducted from its book value and the net loss of Rs 100 is recorded on the expenditure side of income and expenditure account. So basically, whenever there is a sale of asset, book value of asset sold is deducted from the amount of respective asset. Selling price is shown as receipt in receipts and payment account, and the net profit or loss is recorded in income and expenditure account. If loss, then debited, and if profit, credited. Hope you are understanding these accounting treatment very well. So let's move ahead to the next one, that is sale of periodicals. The amount received on account of sale of old newspapers or periodicals are recurring income to a concern and therefore treated as revenue incomes. And so it is shown on the income side of the income and expenditure account. Moving ahead, next item is sale of sports material. Sale of sports material, that is sale of used materials like old balls, bats, nets, etc. is a regular feature for any sports club. So it is usually shown as income in income and expenditure account. Is this clear to you all? So here we complete our today's session. We hope you liked the session and you have understood all the concepts very clearly. If you have any doubt, do ask us in the comment section below. And also do visit our website www.letstute.com for many more accountancy and other courses at very reasonable prices. Do subscribe to our channel and don't forget to hit the bell icon to get notified for the new videos uploaded. So see you all in the next session with some more peculiar items related to NPO. Until then, keep watching, keep learning. Thank you.